Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Carson here with a breakdown of the action in today's session, where we did see the market close with gains on Friday, but we ended up with losses for the weekend.
Yeah, interesting week for the market and leading stocks. I want to take a look at a few stocks that are around buy points: Vertex Pharmaceuticals, Calix, and Celsius Holdings.
All right, we'll get to analyzing those three stocks, but first, let's take a look at the major indexes today. We have the S&P 500 up about 0.5% today, but leading were blue chips and small caps, with the Dow and the Russell 2000 up 0.6% apiece, and the Nasdaq finishing with a fractional gain today. So, what's your take on today's action, and then in the context of what we saw this week? Was it constructive, or if we're coming up against key resistance levels, is this a potential warning sign? How should we be viewing the action?
Well, it's potentially constructive. Obviously, if we can sell off next week, then we'll look at Tuesday's high as the start of a big problem. But I think for the indexes, it was constructive. We had run up quite a bit last week and the week before that, and we were getting up to the 200-day line. So a pullback was it was expected. So in that regard, not a big deal. While it was a drop of more than 1% on the Nasdaq, and I was probably, a little under that. It was under that on the S&P. But, look at that big gain in the prior week. So not really that problematic. I think the issue is that, and now, of course, it's just what comes next, is what we have is that the leading stocks is that a lot of stocks flashed buy signals from like the end of last week into early this week. But from Tuesday's intraday high in the market to Thursday's lows, there was a decent sell-off in the indexes, and a lot of leading stocks that were starting to get momentum sold off. And so it's just been a tricky market, because you look at all these places, whenever we get going, that's about the time when something bad happens. We've had these spots where whenever we get up a ways, that's when we have just when stocks are going into buy signals. And S&P looks better than the Nasdaq. The Nasdaq, it's like there really hasn't been that much of gains. There'd be these big gains and then fractional gains from there, and then pretty big sell-offs. So that's been even harder. Obviously, growth stocks harder. So anyway, it's just tricky. Investors have to navigate that. They have to understand that it's choppy markets are difficult. Luckily, we're going up overall, but it's still a difficult market to navigate.
And I mean, we've been really pressing this point all year, and I feel like it still stands, and that is, don't chase breakouts. Only go with early entries, because a lot of breakouts have been super, super tricky.
Yeah, absolutely. And looking for those early buy points, taking some profits, not getting concentrated, just a lot of things, not rushing in. Because if people, like, let's say you said, oh, I think I should be 40% invested, but only 10%, and then you jump up to 40% on Tuesday. Well, think about all the stocks that came back on Wednesday and Thursday. So that's why it's another reason why even as you step in, don't get too aggressive in doing that.
Yes. Great point there. We'll take a quick look at the Dow and the Russell, which led today. The Dow getting back up close to that 34,000 mark, which it hit earlier in the week. Perhaps that is the next hurdle to clear. And then for small caps, IWM, the ETF, which tracks the Russell 2000, a bit of resistance right at the 40-week line, or the 200-day line on the daily chart here. But just like the S&P hit some resistance at the 40-week line in August, we did see the same for the Russell 2000. Is it going to be a repeat, or the question now is this more of a battleground? There's a couple of different scenarios that could unfold. We could see more of a sell-off, and this was just a bear market rally, or we could see some sideways action, or we start to see things meaningfully improve. That's kind of the options that we have. What's looking likely to you?
Yeah, I mean, all those could be possible, and I do think the Russell showed the most negative action in a sense, because while others, they pulled back from areas that weren't that important and they found support. This one actually came through below its 200-day line. Now, to be fair, it did find support at its 21-day, so it wasn't like this fell apart. But yeah, I mean, that is an issue. The Russell getting above its 200-day line, and then the S&P getting above the 200-day line, those are the next hurdles. Doesn't mean it'll happen. As you say, that was a big area that, these declining tops, and we've had that issue with the S&P clearly, and getting above it a little bit, because it came above it in March for a little bit. Not that that started to look pretty good, but it's not saying that it's the all clear. So
Right.
very big tests coming up in the coming weeks. It doesn't have to happen right away. We could go sideways. Next week might be boring. Sometimes isn't. I know that the day after Thanksgiving, several years ago, we had a follow-through day, which we didn't need. So I was like, you don't expect that, but we called it a follow-through day, and that rally worked. So I mean, it could go sideways for a while and then move. But yeah, this is an important point. So that's one other reason maybe why investors shouldn't get too aggressive right here as they wait for a real turning point for the market.
Yes. Let's also take a look at the 10-year Treasury yields here, TNX on MarketSmith. A little bit of a boost on Friday, but still, if we look at the weekly chart here, essentially flat for the week after a pretty solid move down the week before.
Yeah, and a lot of Fed officials were hawkish. I think part of what they were doing is trying to keep the yield from falling, because they don't want these market rates to fall. But yeah, we had a big drop. That was definitely a tailwind for the market. And so, I mean, if you want to know how the stock market's going to do, I mean, looking at this Treasury is probably a pretty good idea.
Yes, there's a reason why we look at this every day. And let's also take a look at the sector action this week. Here's a look at XLE. Oil prices down pretty solidly, at least intraday, closing off lows here. But for the week, USO, a proxy for the price of oil, down over 7%. And XLE, the ETF tracking the energy sector, down 1.6% for the week to break a 4-week winning streak, but still up 6 out of the last 8 weeks.
So you have to put that in perspective. Actually held up very well. I mean, crude oil fell 10%, the actual futures, and natural gas rose 7%. So that helped, because Chevron and Exxon are pretty diversified, and I don't think gasoline fell as much as crude. So there are some of those things going on, but yeah, that's an issue on that. Definitely some energy names came under some pressure late in the week, but in the context of this run, it wouldn't be bad for them to set up, because a lot of them were getting extended. They could use a pause.
Exactly. And we also want to take a look at the chip action this week. Some pretty notable resistance for SMH at a declining 40-week line. A lot of chip sector news this week. We had Micron warning, we had earnings from NVIDIA. How should we be thinking about the chip sector action this week?
Like the market, I think it's understandable that it would pause here. It's had a really big run, and there are a lot of pricing in a future recovery, because these earnings are not good. They don't look very good at all, but that's what happens with the chip sector. So we'll have to see. You look at, if this group can go higher, that would be a real positive for the market, real positive for techs, because a lot of the rest of the tech sector is not looking so good.
Yeah, exactly. So let's take a look at the tech software ETF IGV, a big downside reversal this week, with it finishing lower by about 3.5%.
Yeah, and that's even with things like Microsoft not doing that badly. A lot of the cloud software has really struggled in the last several weeks. So it's software, a lot of software weaknesses more than this index would show.
And let's also take a look at ARKK, which is a proxy for the highly valued, or more speculative, I guess less highly valued than they were at one time, but the more speculative growth stocks, should we say, down almost 10% this week, Ed, after a huge upside reversal last week, up almost 15%. So I guess this further proves the dangers of trying to bottom fish.
Yeah, absolutely. I mean, you can get these huge gains, and also you can see how this has still been lagging. This hit new lows just last week with, a lot of aggressive growth did. So whereas others have found support, it's just, yeah, you can get these huge gains, but there's been a lot of huge gains in ARK and a lot of other stocks, and yet you can see how much it's fallen over the past year, really almost 2 years now.
Always good to check in on that. And now let's take a look at some stocks for your radar. We've got Vertex VRTX in the biotech industry group, clearing a trend line here in a buy zone. And it didn't look like we got above average volume, but increasing volume over the last couple of sessions. This one's been hard to handle, Ed. I mean, if we take a step back on the weekly chart, maybe that has the smoothing things out here a little bit better, but on the daily chart, there's some pretty big red bars. I guess if you kind of put your thumb over those, it's looking like a pretty smooth ride.
Yeah, this one would have been really hard. I mean, I'll be honest. It's unfortunately, it's like one was just before earnings, and then everything was fine. I mean, let's put it that way. It was sort of like one of those situations. And then there was a situation last week where a bunch of medical stocks came under pressure, which is a reason why you don't want to be concentrated in a particular group or theme. Like if you were in a bunch of defensive growth names, it was really a bad day, certainly a bad morning. But generally, aside from that one day, it's generally close, above or right around the 21-day line. So, I mean, this is one, we've sort of stopped looking at some of these defensive growth names, but they've, there's been steady progress. You can look at that relative strength line. It's been rising for the past year fairly steadily. I mean, it's that's one not to, forget about. It does have some solid growth. And so I think that you want to keep in mind something like this. Found some nice support at the 10-week line this week. There's definitely things to still like about it. But yeah, even a name that looks sort of safe, looks sort of steady in this market, yeah, you probably wouldn't want to make this a 30% position in your portfolio. But I'm not sure what you would want to make a really giant holding in this kind of market.
Yeah, that makes tons of sense, Ed. It's just further proof of the kind of market that we're in. If stocks that have stellar ratings and rankings and general trend and relative strength like Vertex can still be subject to the violent sell-offs that we've seen in this market, that volatility is definitely still there, even with the leading stocks. And we also want to take a look at Calix. This is in the computer networking group, and I have a really long trend line alert here from Ivy Live this morning. But Ed, this was one that we had you take a look at, and it finished up almost 7% today. We did get above average volume, so looking pretty interesting here.
Yeah, we had this big gap up on earnings that was like after several weeks of tight action, sort of strange. Wasn't quite a base, wasn't quite there, but nice bounce. And it pulled back, actually gave up all the gains at one point. There was a really bad day in there. But generally, it sort of found support around the 21-day line, and that's where it rebounded today. So above average volume, to point out that the numbers aren't great. That's one thing, at least on the earnings. But there's a lot of build out by some of the big telecoms, and then there's government spend, benefits for rural broadband. And so it's supposed to come up. We're seeing the revenue growth pick up. So that's really accelerated for the past 3 quarters. So there are some things in there. This was our stock of the day. So you can learn more about that company. And also the networking group is very strong. I mean, there's a variety of them that are doing well. There's Digi, is strong. Arista, there's even Cisco and Juniper are showing some strength. So that's a real positive that you're seeing the whole sector do well. This is a rare tech group that really seems to have a number of names, really doing well.
Okay. Well, we'll continue to keep an eye on it. And next, we want to take a look at Celsius. Is it going to have another high octane move? We'll have to see. Right now, hitting some resistance around that century mark.
Yeah, and I think this is a good thing because I didn't like how it was getting up there. It was starting to get extended from the 50-day line, which is not rising yet, and it's not going to rise for a little while. So it'd be nice if it could form a handle. Now, to be perfectly honest, a handle right here would be too low, but at least it could provide an early entry. That would be a little bit safer.
We can call it a pull, a pullback or a pause
A
instead of
pause,
a
so
handle.
yeah, because I wouldn't want to buy it if it's buying like at 105, 118. That would get way above the 50-day line, and it just does not seem like that kind of market. We're also seeing the moving averages starting to stack correctly. The 10 and 21 are they're going to be above in the next day or two. They will be above, barring a plunge in the stock. So those are some technical things that are sort of improving. If this comes down in light volume, forms sort of a too low handle, that would provide an entry point. This is also one thing, is this is a rare aggressive growth stock that's showing some resilience. Most others are really struggling. So just keep in mind, can this buck the trend? It certainly has in 2022.
Yeah, we'll see how it acts around this round number here. In the prior week, where we saw a lot of stocks making big moves, we did see Celsius up over 8%, added on almost 4% this week. So yeah, I think it's safe to say that a pause would be constructive here. So we'll continue to keep an eye on it, because as you said, this has a lot of what we like to see in growth stocks. And speaking of, Ed, does it seem like it's the cupboards are still kind of bare in the growth department, as we've seen the rally over the last couple of weeks? It feels like the ones that we've talked about have been in that sort of tricky situation of breaking out and then pulling back along with the market. So we haven't seen much clear-cut leadership.
No, not in the growth area, not elsewhere. There's still, I mean, on the upside, there's a lot of sectors that are showing some interesting things. So, but we don't know which ones will do it. And honestly, this is why a consistent uptrend is so important. If we could just have even just a few weeks of a thing, then you could start seeing build a position. And then if your stock goes up 15%, and then if you have a pullback and like, oh no, it's only up 10%, that you can handle. It's when you have these situations where it's like you're up 3% or even up 6%, and then you come back down and you're down. That's where things get so tricky, and that's what's been so difficult with this market. But you have to recognize this is not 2020. We're in an uptrend. You probably want to be involved in this market, because especially if it picks up steam, but it is definitely one you have to be nimble on and have a light touch on.
Yeah, exactly. Yeah, pick your spots and be nimble, be quick, and try to not get dinged up too much too, I think.
Yeah.
All right. Well, you know what also was interesting this weekend? I guess I don't know. The timeline is blurred now, but it's still being buzzed about, and that is what happened with crypto. And we have a friend of IBD, hedge fund manager Jim Ropel, who has been a crypto bull. So I'm going to have him on Trader Tales with IBD at 5 p.m. Eastern to get an updated take from him on what exactly happened. I know he's really plugged into all things crypto. So I think having a slim-minded person discuss that, albeit, yeah, he is also a self-described crypto bull, I would say. I want to see what he thinks about crypto now. And it should be an interesting discussion, Ed.
Yeah, it'll be good to hear that, because he understands, investing in trends and all these things. Like it's always good to hear, because he is such an optimistic person. I'd like to hear the bull case and what he thinks it'll take to get Bitcoin and crypto back on track.
We'll have to see. It's going to be an interesting discussion. So make sure you check out Trader Tales on my YouTube channel, youtube.com/Alissa Coram IBD. See you there in not too long from now. Hope you have a great weekend, everyone. And the crew will see you back Monday morning on IBD Live.